Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my thoughts, opinions on the markets. Read more on the disclaimer below. And let's get into today's stuff. Big day. The Fed wanted to cut rates, and I was right. It was a 25 basis point. And you can tell if you look at the stock market today, the S&P sold off, but the Dow, that was up over, sorry, I should have had these out while I was doing this video, but the Dow was up over 200 points, but the S&P was actually down 6 points. And gold wasn't even down 30 points. So if you look at it, the Dow finished 260, S&P was down 6, NASDAQ down 72. Let's just do GLD. That's a proxy. That's down 2.62 points. 1% really sold off. It spiked first and then just sold off and this is what I said. It's not going to be much of a. And if you look at the long year, if you look at it, that started skyrocketing. And I think that's why the initial buys started turning into sells, is leverage and margin calls and all this stuff, because it wasn't a big rate cut. He doesn't want to give in to. The Fed wants to be seen as independent. They don't want to be seen as, bullied by Trump. So they're going to try to do it as hawkish of a rate cut as possible. And unfortunately, we have dumb big money that believes this is coming. So that believes such things as a hawkish rate cut. So, and I mean, I guess I can see the point, because the long end, those rates are going to go up. So I guess that's why. And if you actually look at the Dow, I think this is the futures, but you can tell sold off shortly after. This is 212, and it sold off. It came back some, but even the Dow, the S&P, that was, let's see, around 2. There was a bid and then sold off, bought back some, but gold was not really. This was more of a smackdown. And on Monday, I mean, for full disclosure, I sold wasn't that material, but it was like 1 or 2%. I guess I trimmed some of my portfolio. I've been, short term. I'm not really that bullish. I think there's due for a correction. That could just mean in times. It doesn't have to go in terms of price, sort of like the April correction. That really just corrected in time and went sideways. If you look at it, gold, it's around 365.3. It might retest that high and then go, finally make another one. So I still think silver's going to 50. It might correct and then go to 50 next year. I don't know. And then that's when I think once it breaks 50 and makes a run, that's when I'm probably going to be aggressively selling. But I trimmed a little bit. I mean, my portfolio is almost all, precious metals, and it was like cash that I sold today. That's in my, emergency savings now. So this is just what I do, not financial investment advice. And I don't recommend doing what I do, having almost all your wealth in mining equities, or mining, royalty, and streaming, anything gold related, gold and precious metals related. I might actually change that, though. I might open a brokerage account and start another brokerage account, start doing a little oil, because it's so cheap. But because I'm just doing well for my daughter, so I might as well do one for me. So some of the things I want to get into the news, everyone talked about the retail sales and the strength of the consumer. And wanted to do this yesterday, but it did not. But if you look at this, so it's right here, the retail sales forecast retail sales, which are mostly goods and are not adjusted for inflation. If you want to know why it went up, it's inflation. It did not go up. And so that's the sad thing, and that's why people still think, and look at this, adjusted for inflation, they think it only rose 0.2%. But if you look at it, these retail sales, they're not adjusted for inflation. They're the most phony number ever. So, and in April and May, they were negative. I don't know. I've covered it. And that just is more of an indictment on how bad the economy is. Because inflation was 2 to 3% according to their numbers. Obviously, it was a lot more. But if you have, with prices going up like this, and you're not adjusting for inflation, and 2 months were a decline, that shows how bad the economy is. So, anyway, just wanted to get into it, show. There's other things I want to see, and this is why the Fed's cutting rates. This stuff's getting into the pipeline. So look at this. Nearly 40% of workers now see living paycheck to paycheck as financial progress. Nearly 40% of workers is Money Talk News. Of course. They can't just let me highlight the title. Despite working multiple jobs and side hustles, millions of Americans still overdraft monthly and lack of emergency savings. Nearly 40% now seeing living paycheck to paycheck as progress. So there you go. You got that. Just goes to show Americans aren't living paycheck to paycheck. That's actually progress. So, other news, U.S. holiday sales growth to slow as shoppers tighten budgets. That's sales forecast. And so U.S. online sales growth during 2025 is expected to slow from last year's as price-conscious shoppers stay picky with their spending. So this outlook echoes reports from Deloitte and PwC. Now, this is the big four account. These are what accountants are saying. CPAs. A subdued holiday season that will prioritize essentials and hunt for deeper discounts and cut back on discretionary. So Mattel has cut their forecast. Of course, Walmart and Macy's have raised their outlook, but we've covered this. It's because the higher income people are trading down. It's not because, the middle income or working poor are now raising their wages. And so they're going to Walmart to buy more stuff. So, and look at this. To show how bad, Walmart is cutting prices on 500 items. They're not cutting prices. Everyone said tariffs were going to raise prices. So why are they cutting prices? It's because they know the American consumers broke, including the upper income. It's not just the lower income. So there you go. Online, everyone used to shop online, so. And then, what is this? There was something I wanted. Was there something here? Oh, I think that's what it was. We don't have to go in this. And here's another example of just bad leadership. So this is David Rubenstein. He said he doesn't see a recession on the high on the open. I would love to play this, but I don't know if it was. But he's the co-founder of the Carlyle Group, owner of the Orioles. He said AI is going to do amazing things. He owns AI stock. He's riding the wave. It's basically an normie. And honestly, this is why I said we got to let these people fail. We have stupid people running things, and AI, it's a pipe dream, it's fantasy, it's not real. Of course, let's look at the Orioles record. Oh my gosh, is this a joke? Both. Oh, they're beating the White Sox. So anyway, it's 72 and 80, below 500. Well, he thinks AI is gonna improve humanity. Doesn't see a recession on society. So what do we know? He has bad judgment, and the Orioles record does reflect it. So anyway, bad judgment. You can say, oh, well, they've been good the last 2 years, but the reality is Mike Ellis was not his guy. He didn't hire that guy. That's the guy who drafted all those guys. So anyway, more things showing how bad the economy. Gen Z, biggest drop in FICO scores since the financial crisis. Now, Gen Z wasn't around for it, but they're going to have one of their own. Us millennials, we get to have them all. Tech. We get the tech bubble. We get the uh, financial crisis, GFC, and now we get this. Get the tech bubble. When we're just going to college, so completely all the majors no longer relevant, and then get to graduate into the financial economy, and now we get this one. Gen Z borrowers took the biggest hit of any age group this year, helping pull over credit scores lower from in the worst to US. Whatever. I'm tired. I had a long day. But yeah, Gen Z, bad. I mean, they don't have high wages. They have huge student loans. I feel bad for them. So anyway, if you're having, I'd hate to say, I try to save as much as I can. I find creative ways. Like one thing I do is like, let's say I have different bank accounts, and I have one that's solely for emergencies or taxes. I use that for taxes too. And I have that bank, and it's the safest one. It's part of like the safer banking research. I'm not going to say what it is because I got it from Avi in his newsletter. I don't want to go spilling his picks. I would love to tell you all, but I'm not going to. But I bank there, and that's where I keep. And I have like my emergency $12,000 in savings is there, and I have that for taxes. April 15th. And then I have another bank account for spending. It's a federal credit. And then I have a federal credit union just for big purchases, but I can spend if I want to. So I have one that's solely savings, but it's a checking account. So, and I divide up like where I spend and how I spend and use which account to spend. And it makes it easier for budgeting because I know at the end of the month, if this account runs out of any money, I can no longer go out and have fun. I have to wait till next month when I put in 500, 1,000, whatever I decide to spend that month, replenish, and I just wait till the end of the month. So a good way to budget. And then I also use credit cards. And what I mean is I'll buy it on credit card, and then I'll immediately pay that credit card that day or the next day, just using the app. And then that way I collect points, and I do cash back. I'm just saying these so if you think they'll help you or not, or if it's a strategy you might want to employ, not advice, just saying what I do. And so that's what I do. And I do not bank with anyone that doesn't pay interest on their checking or savings account. I just don't. I think that's a red flag that they don't have much money. So they take my money and lend it out, and they're not even going to give me interest. That's a scam. It's dishonest anyway. So last thing of the news, we got it right here. Food for thought. Luxury steakhouses are closing. And so it's right here. Food for thought. Look at this. Food for thought. Luxury steakhouse closures are here. Major steakhouses chains, including Ruth Chris, which I love, Morton's, are closing locations across affluent areas. These closures suggest wealthy consumers are reducing their discretionary spending. And who doesn't love a good steakhouse? Ruth Chris is like one of my favorite places. Uh, where the Porter, their New York strip. If you are at a steakhouse, I mean, if people aren't spending on a steakhouse, that is the best economic indicator. Because if times are good, you want to go to a steakhouse. Who doesn't love a great steak? Well, if times are bad, this is like the first thing you cut out. Like, hey, I'm not going to a steakhouse. I can't afford $100 or $200 meal. Like, no. So this is the perfect economic indicator, and affluent people are not going anymore. So anyway, that's all. Just remember, this is not to be construed as financial investment advice, and just food for thought. Just my thoughts is I think gold will correct either in time or price, and I think silver will break 50. I still think that, but I sold a little bit on Monday just to trim some of my positions, and yeah, that's pretty much what I think right now. I don't think this run is over. I think there's one more breakout, but that's all. I mean, just my opinion, not financial investment advice. You see, problems in the economy, they're going to cut more. And yeah, that's all. So anyway, thank you for listening. If you listen all the way through, hit that like button, subscribe. Remember, disclaimer, not financial advice. I'll see you next video.